The key change, there's three key changes that have happened right now. The first one is the 5-year, all qualification for mortgages after April 19th is going to be on a 5-year basis. So a 5-year fixed term. So whatever your interest rate is, when you go to get qualified, they're going to do it based on, it depends if you do it with a broker, if you do it with a bank, they'll take their 5-year fixed rate term, and then that's what they'll qualify you on. In the past, they've been able to fluctuate between a 3-year and a 5-year. So that was the first change. They've made that a rule. As of April 19th, all mortgages are now qualified on a 5-year fixed rate. Okay. So before, you were allowed to refinance up to 95% of the value of the home. Now the new rules after April 19th will be that the maximum you can refinance to is to 90%. So there has to be a 10% equity cushion in there. And the reasons for that, there's a variety of reasons for that, but the main reason is that the government's afraid, because listening to some of the economists, that the market is going to go down in the next few years. So that 5% cushion will be less, and it won't be there any longer. So a lot of these people will be in 100% financed mortgages. That being the case, they may be more tempted to walk away, like what's happening in the United States. The last thing involves investors. Investors have normally always put down 25% to avoid CMHC when it came down to financing a revenue property or an investment property. In the last few years, they've been allowed to put down as little as 10%. There was 5%, but that changed last October. Then they went to 10%, and then that just changed as well. And now they must have at least a 20% down payment in order to do this, in order to buy a revenue property. So that still means the mortgage will be insured if they put 20% down. So that still means they're going to have a premium on there of about 4% on a 25-year amortization. So those are the three big changes that have taken place.